saying that this bullish sentiment is actually bullish. He'll explain. Listen, you talk about a pedigree. Jeffrey Hirsch, his family goes way back with the stock market almanac. So when we talk about history being prologue, he's your man. Next. You know, there's a great article on Bloomberg yesterday that noted the rah-rah mob saying they may have problems with the track record of the stock market performance in the month of February. Well, my next guest was actually mentioned in that article. I want to bring a Stock Traders Almanac editor-in-chief, Jeffrey Hirsch. And, you know, Jeffrey, we know February seasonally the third worst month. We got it up here on the screen. But, I mean, isn't it okay for the market to take a breather every now and then?
Yeah, that's what February is. It's the weak link in the best 6 months, especially after big gains in the fourth quarter in January. It's given us some opportunities to get back in, add to positions or make some new ones. So it's generally a good time to get back in.
And I think another reason might be because of your January barometer, right? Because January ended up being a pretty good month.
Solid month.
A solid month, and it bodes well for the rest of the year.
Bodes well for the rest of the year. It's when you have an up January versus down January, the outperformance for the next 11 months or the next 12 months blows away any of the other months. It's like, 10, 11%. And then this is the election year January. When it's January's up an election year, it's up 100% of the time in the election year. You can see 15.6 average percent return.
Are you serious? No matter 100%, it's worked 100% of the time.
You're looking at it right there.
Wow.
Some pretty solid numbers in the election year too.
Wow, up 15.6%.
And when it's down, that's the problem. That's where you get the separation.
But that's only 1%. I mean, that's a hell of a risk-reward ratio. But if I'm going to lose 1% and maybe gain 16%, that's not a bad.
It's quite a good risk reward.
Let's talk about some of your ideas because you've been really, really hot. We're going to put a couple of them on the screen,
Sure.
but I know in November you went heavy on a few names that are up huge. Let's talk about them.
Well, one we went heavy back in November 2022, which everyone's talking about, SMCI. This was something that came through our screens. We do a fundamental screen.
Did you ride that all the way down, that roller coaster kind of thing?
We put our stop way below down there. With a company like that, a stock like that, we don't want to get stopped down. You want to let that one ride. That's up like like 700%. We recommended it at 81.93 back in November 22. Verco is a small cap, just a solid company. I mean, this is kicking out, a growth, acceleration of revenue growth and earnings, good valuations. They make equipment for schools and stuff. But NVT is a large cap, and it's kind of a parallel to the SMCI situation because they seem to be benefiting off of AI and the whole infrastructure. They protect electrical systems and infrastructure systems, which I think is getting a nice kick from the AI.
You won't even believe the first price I paid for SMCI. I think it was like single digits. Like it was like years ago.
Oh,
I had it recently because this guy, he's best friends with the guy from NVIDIA. They're best friends. Let's talk about I got 2 minutes to go.
Yep.
And I was shocked when I saw the notes. Energy, you like energy and natural gas. And from what I read, technical and fundamentals. The technicals
it's a seasonal trade as well. You see a low in natural gas and oil in November.
Let's start with the XLE first, the energy sector. So we've got the trend line here.
Yep.
I mean, it's butting up against it, but until it breaks out there, would you be a buyer? Would you be a buyer before
We're looking for a little pullback here, right here in February. I've got a buy limit in below the market for myself.
Okay. And other than technicals and seasonality, it's a fundamental thing ever going to work there? I know.
You see the EV situation, sort of becoming a little bit not as great as everyone's not as enamored with it as it is. We're going to have oil around for a while. We've got some hot spots over there where they make a lot of oil over on the other side of the world. I still see energy being used everywhere. It's just not going away.
And I'm shocked at nat gas. So you got FCG as your proxy for that.
This is the stocks. This was our recent recommendation in the newsletter. I actually got it at our buy limit. I believe it was this morning on the dip. So this is stocks. I mean, we saw the gas rise, and we had the recent, Biden administration limiting exports and LNG. But it sets up seasonally. If you were to overlay the seasonal chart with this, you see how that mid-February low is setting up here, maybe a little bit earlier in February. So set up. Fundamentals, technicals, and the seasonal play is all there for us.
Before I let you go, then, overall with this market, I mean, the seasonality stuff, the things that you point out that have worked so well, that aside, I mean, it feels like we do have a lot more unknowns. Jay Powell seems that's going to be maybe the one wild card, and of course, as we get closer to the election, how does that normally impact what you do?
Well, I mean, you got an election year with a sitting president, up 12.8%. When there's a sitting president running, down 1.5% when it's open. You're seeing the market track that bullish first 5 months period. So we're still on that pattern. I mean, I'm looking for an up year, 8 to 15%. expect some weakness, Q2, Q3 as the campaign heats up. So far, nothing's really breaking, the cycle of the system. We've been tracking the 4-year cycle to a T for the last 3 years. Some weakness here in February. If you look at some of the charts that I put out there, you see a little dip to mid-March as well. So probably some consolidation, some softness, little weakness, but nothing sinister. And I think we make new highs throughout the year.
Great stuff. Thank you very much.
Thanks, Charles.
All right.